Hey, what's going on guys? In this video, I'm going to talk about small account strategies. I know so many people out there are trying to grow their small portfolios, and today I'm going to be talking about some strategies that can turn $100 into $1,000 or even $100 into $2,000. So basically, I'm going to talk about how to 20x your money with a small portfolio. I'm going to be discussing 3 different small account strategies that I'm going to be showing you examples of later in this video. You're really going to like what I have for you. Also, make sure to check out the free email newsletter and Top Leap options I plan to purchase soon. It also doesn't hurt to hit that like button and subscribe to the channel. Something I'm going to discuss is closing positions, because a lot of students in the private Discord have asked me about closing option positions, when to do it and how to do it, at what point to take profits, should they use a stop loss. So we're going to discuss setting stop losses and exit points. It's really important for risk management, and obviously it's going to make a huge difference in your realized profits. So people think that you need millions of dollars or something to make a lot of money, but I want to debunk that myth. I've had a student make $3,000 a month on a $20,000 portfolio for 10 out of 12 months of working with him. It's completely false that you need a lot of cash to see a good return. Everyone starts somewhere, and I started with a couple $1,000s and worked really hard to 20x my portfolio when I had very little amounts of income back when I was in college. You can turn a small portfolio into a medium or a larger portfolio. It just takes skill, experience, and mentorship if you want a shortcut. That's basically what I do free here on this YouTube channel. It's my mission to show you how to make money trading options, and the private Discord is basically a step above, with me giving you buys and sells and spending time on live coaching sessions. It's affordable based on people's results, so you can submit an application, but I really don't care because I'm here to teach you for free on YouTube as well. A combination of understanding which of these strategies to use, risk management, and emotional management will allow you to grow a small portfolio fast. It's not like you need a lot of money to make stupid money. Plenty of everyday people make it happen if they're determined. So I'm going to show you 3 different trades on 3 different stocks that I would place if the market was open. All right, so I'm going to have a little bit of everything in these next 3 trades for you guys. I'm going to have a trade that's going to 5x, 10x, and then I'm going to have another trade that is going to show you how over a year you can actually 20x your money. So let's go over the first trade that I have. You can see I've cheated a little bit and I've showed you guys a little bit of a preview here. So 860, 890, and 830. Don't worry, I'm going to explain that right now. So the first strategy is going to be selling one call option and then buying 2 different call options. Let me show you right now. The first thing that you want to do is sell a call option. Now, this strategy is really betting that Tesla is going to continue trading sideways. We know Tesla was a $1,200 stock and $1,100 stock. It's had a whole lot of volatility, but right now I can see the stock staying in a certain position. I think it's going to continue consolidating and going sideways until we see some big news occur. So of course, you don't have to use Tesla. I'm just showing you an example. I'm not a financial advisor, and I completely don't know which stock is going to do what. So just make sure you're going to use the strategy more or less on a stock that you think is going to stand still. So I think Tesla is going to stand still. So I'm going to sell the 860 call option. Now, what I want to do is I'm going to buy a call option. I'm going to do 2 different call options. You're going to see later right here. I'm going to simply customize, and well, you'll see. So buy call option. I'm going to buy the 830 call option. Okay. You can go for 850. You can go for 840. I'm deciding to go for 830. And this is going to be some easy math, as you will see on this profit loss chart right here in just a second. So I'm buying the 830. Now I'm going to scroll up and buy the 890. So now that I have sold 860, bought 830 and 890, there's only one problem. The problem is I'm paying a whole lot of money. And what I want to actually do is I want to have 2 sells and 2 buys. For each selling call option, I also want to have a contrasting order for a buy a call option. So I'm going to go right here. Instead of a normal ratio, instead of a 1-to-1 ratio, I'm actually going to set a custom unique ratio. And I want to make sure that the ratio of buys and sells is the same. Therefore, I'm going to put 2 for the sells. Now you will see that the total cost has gone down significantly. In fact, it's only $238. Now, if I scroll down here, the max loss is $238, but the max profit is $2,762. So right here, you can more than 10x your money. Now, what I want to explain to you, and the reason why I picked 830 and 890, is because I believe Tesla will stay between 830 and 890. I could have went a lot shorter, and in fact, the return could be even higher if you go shorter, but I want a good mix. I want a good balance of risk and return. So I picked 830 and 890 because this is $30 one way up or one way down. So the break even here is 832. As long as Tesla stays above 832, you're going to see some profit depending on where Tesla ends. You can see right here that the expected profit will vary between maybe $0 at 832.38 all the way up to the peak, which is $2,762. Now, I will say that this specific strategy means that Tesla has to stay or basically be right around $860. However, I am also betting that Tesla will be around these areas, and even right around here, as you can see, right at the bottom of the end, around $836, you're still doubling your money. The expected profit here is like $387, and obviously it continues to move higher as you get to the middle or the peak profit point of $2,762. Now, on the opposite side, you also will be making profits as long as Tesla stays below $887.62. Now, your only loss points are right here if Tesla really decides to fall a lot or if the stock shoots up. Again, this strategy is best for a stock that is going to basically trend sideways. If you find a pattern in a stock and you think that this stock could stay range bound, then this is the perfect strategy. Now, for the second strategy that I want to show you, I'm actually going to be picking Palantir stock, and I want to go over some technical analysis. So specifically, Palantir stock has been trending lower over the past month. This stock was a very expensive stock, around over $20 and even $30 per share in the past 6 months and 1 year. However, in the past month, we've seen a steady decline day over day, every single day, with this stock just going to rock bottom around $12.28. However, what has happened since January 27th is this stock is now consolidating. So I see an opportunity here because, well, Palantir went up, then it went down, then it went up, and now it's going down. So I can see it staying range bound in this area between $12.50 and maybe $13.50. I think right around this point over the next few days, next few weeks, this stock is not going to have a whole lot of action unless we see some really good quarterly earnings. Again, I'm just picking a short-term play. If you're watching this in the future, make sure that you find a stock that is having a similar behavior and use this strategy, which I'm about to show you. So let me show you what I'm going to do. So I'm going to go to sell put option, okay? I'm going to sell an at the money put, a 13 put. This is an at the money put because the current stock price is $13.09. So I'm going to sell the 13 put. Now I'm going to do something pretty similar to what I did with Tesla, except here we're using put options. But now I'm going to buy a put option. So I've sold the 13. Now I'm going to buy the 14, and I'm also going to go one lower and buy the 12. But again, the only issue here is there's 2 buys and 1 sell, so the total cost is somewhat expensive. I mean, it's not that expensive compared to Tesla, but I want to show you how to get this cost lower. So I'm going to go here, going to click custom, set a unique ratio. And again, for each buy order, I want to have an equivalent sell order. So I'm going to put in 2 sells right here. And now you'll notice that the total cost has gone down to $13. Pretty bare bones, nothing, okay? Now the $13 or actually $14 can be turned into $86. So this is a super cheap strategy for a small portfolio looking to learn more advanced option strategies or even simple option strategies. You can play around with different stocks. I'm using Palantir, but again, obviously, I don't have the answers to what stock is going to do what. Maybe Warren Buffett does. I certainly don't. So I would encourage you to play around with a few different stocks. Obviously, my recommendation is to go for cheaper stocks, maybe like Palantir, there's American Airlines, there's HIMS. These cheaper stocks that cost less are going to allow you to have max losses that are going to be like 10, 20, 30, or 40 bucks, and give you max profits that are going to be 5 or 10x, or even potentially 20x on your money. All right, so the last and third final strategy that I want to show you is going to be on Boeing. Boeing is really interesting. Boeing has a very consistent pattern. So when I go to 3 months, Boeing has been traded as high as $233, and obviously it's gone down as low as $189. But check this out. The stock was trading for $233. Then we had a dramatic fall lower, then a quick rise, and it took some decent volume. You can see right here that there were a lot of people buying in. It reached $211, and then it fell again. So it's zigzagging. This is a very clear pattern. V-shaped recovery, but then couldn't sustain the momentum, went back down, and then now we see a W pattern, basically right here, W, and then boom, long W, long momentum higher, and then again, it went down and for the fourth or fifth time, it's up. So this is a very clear pattern for me that, investors are not really sure on Boeing stock. Boeing stock does not have a whole lot of news or momentum in it, although it does look like it's bouncing up and down a lot. I think this is actually the perfect stock to run an iron condor strategy. So I'm going to show you how to profit off of this stock, even though it has a lot of volatility, selling both sides, selling the puts and the calls and making money on both sides, as long as Boeing stays range bound within this area. Now, again, a quick primer right here. This yellow area is actually called a Bollinger Band. Okay, so the Bollinger Band right here, if you check it out, I put 20-day period, I put 2 standard deviations. Now, this Bollinger Band is telling me where Boeing stock is likely to trade within. Now, 2 standard deviations captures about 95% of the time of where the stock should be trading at given statistics. Okay, we don't have to get too technical here, but basically 95% of the time, Boeing is going to stay within this range right here. Now, you can also see the moving average and the Bollinger Band are both right around $200. So I'm going to be looking to make a play on Boeing for around $205, $210 where the current stock price is, and bet that we're not going to see it rise beyond maybe $228 and the bottom of the Bollinger Band, which is about $190. Now, let me show you what this is going to look like. So I have Boeing right here open. I'm going to go for February 18th, which is about 5 days. This is a very short-term strategy. So I promised I would teach you guys a little bit of everything in this video. So I want to give you a short-term trade, but of course, this is only a few days out. So if you're watching this in the future, what you can do, if it's say February 18th, you can go for March 4th. If you're in March, you can go for March 18th. If you are in June, obviously in June, there will be more options, but right now you're only seeing monthly options. Again, I'm gonna go back to February 18th, that's fine with me. And February 18th, in fact, what I'm going to do is, because the Bollinger Band right here was taking into account 20 periods, I'm actually going to change it to 5 periods. And now when I change it to 5 periods, you will see that the range has considerably tightened up. Now the bottom of the Bollinger Band is about 209 and the top is 220. But what I'm going to do is I'm actually gonna be a little bit safer. So although this is pretty safe as is, I'm going to change standard deviation from 2 to 3. Now, instead of 95%, this is capturing 99%. So this is a very safe trade to now run the iron condor strategy. So to begin this strategy, I'm going to sell put option. Now, the bottom of the Bollinger Band was about 206. So I will go down to about 205. So I'm gonna sell 205. Now, to open up a proper iron condor, when you sell a put option, you wanna protect yourself and buy a put option as well. And you wanna go one leg lower. So we're gonna go from 205 to 202.5. Now you will see that I've opened up a put credit spread and I'm collecting a total credit of $56. So I'm collecting $56 and I'm risking $194. However, remember that I've mentioned the bottom of the Bollinger Band is 205, so this is a very safe trade over the next 5 days. But it gets better. In fact, it gets a lot better. And it feels almost like a cheat code because when you open up an iron condor, I've opened up a put credit spread and I'm collecting $56 worth of premium, but now I'm going to open up a call credit spread. And in fact, the beauty of this and why I think it's a cheat code is that I'm going to be collecting more premium. I'm going to collect some more money. However, my max loss is going to go lower. And that's because only one side of the iron condor can happen. Either the put can happen or the call can happen. The stock cannot end both lower than the puts and higher than the calls. And for that reason, your broker is not going to charge you more collateral for opening up this second leg of the call side of the iron condor. In fact, your max profit will go up and your max loss will go down. So again, let's take a look at the top of the Bollinger Band. It's about $222. So I'm gonna go right around $220. I think that's a safe point. So I'm going to sell the $220 call option. And now to protect myself, I'm going to buy the 222.5 call option. So purchase that right here. And now you'll notice that my max profit has gone up significantly. In fact, by about 50%. It was about $56. Now it's $117 and my max loss has gone down. Now this position right here, I'm essentially able to take a 50% premium and collect 50% on the collateral that I'm risking. So as long as Boeing stays between about $205 and $220, you will see the full profit. Now within this range, $203.83 up to $205, you're gonna be making a varied amount of money depending on where Boeing ends. And of course, if it falls below $203.83, you can see a loss. You can see a loss of $133. Now for you to see that loss, Boeing really has to go beyond these ranges, 3 standard deviations, and show a really big fall or a really big rise for you to lose any money. Now, I believe 95 or even 97% of the time, you're going to be within this range right here, and you're going to collect a lot of money. Sometimes you will lose 100% of your premium. However, in my experience, I've been doing this for 9 years, I've collected way more premium than I have lost given any particular loss. Now, this is where it's important to talk about risk management and how to close these positions. So first of all, risk management, you want to make sure that you're not risking more than 3 to 5% on any one single trade, especially when it comes to these small account trading strategies. So let's say that you have $1,000 or $2,000. So on a $1,000 portfolio, you're trying to only risk maybe $50 to $100. Now, a $1,000 portfolio is obviously a very small portfolio. So when it comes to risk management, if you do have $1,000, then maybe you do have to go for a 10 or 20% position. But generally speaking, you want to keep your position sizing as small as possible, so any given one loss is not really going to wipe you out or really hurt you. Now, in terms of closing this position, what I found really successful is I personally hold the position until expiration. But I do know that a lot of people want a strategy for getting out of the trade if it's not going in their favor. And to that, I say you should set a stop loss for about 75%. So let's say that you're betting about $300 worth of collateral, or let's make it even easier, $1,000 worth of collateral, and you're collecting $250. Well, if this option goes against you and it goes down to maybe $750, you see that it's a negative $750 total, which means that you're going to be down about $500. You can close the position once it reaches 75% of the collateral. Okay, I've seen that really successful, and a lot of my students really like to close positions when they reach, negative 70% or negative 80%. Right in that area, you're going to see a sweet spot. If you want to see me execute these trades, if you also want to follow along with a challenge that I have from 7K to 17K that I'm running, I keep track of all my results, and I've so far made over $1,500. You can check out that challenge by clicking the first link in my description. Thanks for watching.